Wall Street is about to finish a year that went far better than most people had expected or predicted. The major U.S. averages have soared over the past couple months. Slower inflation and the AI rally are big reasons why. Going into 2023, many economists were in fact predicting a recession. You'll remember that in a weak year for stocks. But can Wall Street keep this momentum going in 2024? Here's our crystal ball of risks to global markets. Look at that. First and foremost, geopolitical issues may rattle investors. Wars in Ukraine and Israel could escalate. The inflation fight isn't over for many economies. A hard landing brought on by high interest rates, yes, it's still possible. And finally, the unknown unknowns. Random shocks like this year's banking crisis can always come up. Stovall is the Chief Investment Strategist at CHRA. Good to have you with us again. Another year that was not for the faint of heart. We have less than a half an hour to go in this trading year. You know, the market has shown great resiliency, but do you think it will last?
Well, yes, I do, Paula. And first off, Happy New Year in advance to you. I think that the market itself is telling us that it really does not see a wall of worry that is just too high for it to circumvent at this point. Expectations are that we could end up seeing a new high fairly soon in the new year. And history tells us that once we recover all that we lost in a prior bear market, the market itself continues to advance for close to another 10% over the ensuing 3 to 4 month period. So a bit of optimism ahead of us.
10% would be a good thing to pocket even early into 2024. I do want to ask you about those geopolitical shocks, though. They remain a grave risk. You know, for a while this year, I felt that the market was still quite vulnerable. And yet, as I say, it was quite resilient. What do you think? Do you think the market does a better job of trying to insulate itself from those geopolitical risks?
Well, I think that the market pretty much decided that the geopolitical risks would be on the back burner at this point, and that the primary focus was on the Fed. How long would they continue to raise interest rates? When they did stop, how long until they started to cut interest rates? And I think Wall Street basically decided that with the 10-year yield peaking at about 5% and now well below the 4% threshold, that allowed investors to breathe a very deep sigh of relief.
Absolutely. And the price of oil has been interesting to kind of track that as well through the economy. I want to talk to you a little bit about asset allocations here. The bond market was a big story in 2023 for all of its downs and now a little bit of the ups. What would you say to investors when they start to look at asset allocations in the year to come, keeping in mind the philosophy about this has absolutely been turned on its head in the last few years?
Well, it's a perfect reminder that we saw the 60-40 portfolio, 60% equities, 40% fixed income, do quite poorly. And everybody questioned whether 60-40 is what people should be using in the future. And then once again, history basically said that the market, both equities and fixed income, tend to right itself like an upturned ship. And that's what we saw in 2023. So I think investors are reminded that it is good to have a diversified portfolio, but every once in a while, both of those sides of the equation tend to go down.
But does that mean you absolutely must remain active? For instance, when we look about weighting in asset allocations in the year to come, would you say, given what you just told us, look, try and weight a little heavier on equities, at least for the beginning of 2023?
Well, I think right now I would basically keep my foot off the gas because the S&P 500 has risen by more than 12% since the October 27th low. We've had small and mid-cap stocks up about 20%. So I think a lot of enthusiasm has already been built into stock prices. And traditional measures of being overbought, I think, are flashing red right now. One of them being the CNN fear greed indicator, which right now is reading 78, which is in the extreme greed area. And usually that's a very good contrary indicator.
Got you. We hear you. Foot off the gas for now. Keep your powder dry. We're just going to mix up all of those cliches going into 2024. Sam Stovall, Happy New Year to you. And thanks so much for joining us. Appreciate it.